Well, as you can see on your bottom of your screen, Vedanta numbers are out. Margins at about 20.1%, 22.6%, and the other numbers on your screen. Now, before we try and give you some perspective out there, let's get in Vikash Singh of Phillip Capital, who joins us right now on the phone line to analyze these numbers. Vikash, what have you made of these numbers from Vedanta?
The numbers are below what we were expecting at the operational front with the EBITDA of 44 billion. The main slip, what we can see is from the aluminum division. While the aluminum division last quarter, they have done 179 crore kind of EBITDA, we were expecting at least 200 crore this quarter. On the contrary, the company has reported 114 crore negative EBITDA, mainly coming from the Vedanta Aluminium, which has posted 176 crore. So I believe that the higher alumina cost could be one of the reasons behind it. More clarity would emerge once we spoke to the management in today's con call. So that is the only segment which seems to be a miss. One more thing which needs to be seen, that in the presentation they have seen that the debt has come down. In terms of net debt, this quarter has come down to 20,000 crore, which is a sharp fall from the quarter-on-quarter basis. This is the only positive point in the entire results.
Vikas, largely I think the numbers were expected to be tepid because of the cool-off that we had seen for a couple of these, commodities. If you look at the LME prices as well, and I'm just going through the numbers, there is an exceptional loss as well, which they've posted of about nearly 450 crore. And besides that, there is tax right back, which has come in to the tune of nearly around deferred tax gain of nearly 1900 crore versus the tax outgo that we had seen in the corresponding quarter, and also the other income appears to be on the higher side, so that's also northwards of 800 crore. So making all these adjustments, and that's the reason probably you could see a bump up in the bottom line. But the other segments you've already highlighted. Aluminium, I was looking at the EBIT performance. I think at EBIT level they posted a loss there, but what about the oil and gas space?
Oil and gas price has been reasonably better. So if you look at the quarter-on-quarter, despite price correction in the oil, they have done decent performance with 1,817 crore EBITDA, which is just almost at the same level what they have done last quarter. See, all those numbers which you are talking about, this 422 crore, one of is basically they have taken a write-down of their exploration assets. And this tax, they shifted to the new regime of 25, effective rate of 25%. These are one-off. Operationally, what we see that though the performance expectation was weaker, it is slightly weaker than what we were building in, mainly because of the aluminium division's underperformance.
Okay, so largely a lot of adjustments on the top line, bottom line. Operationally, it seems like it will be important to monitor the number. I think we're also joined by Nikki Mirchandani, our in-house research analyst who tracks this company pretty closely. Nikki, first a word on the operational performance.
Well, Navneet, from where I see it on reported basis with no adjustments included in that, looks like it's a slight miss from the estimates. It's 5 to 6% lower than what the street was estimating. But if you look at the top line growth out there, it's a 10% beat. But then we're yet to see if there are some sort of adjustments there on the top line performance of the company. We'd essentially like to see which of the segment essentially has done really well, which has to an extent led to somewhat inline sort of performance coming in from Vedanta. It's more to do with the fact that the LME prices have been lower. Even in you talk about zinc, you talk about oil and gas, you talk about aluminium, all of them year-on-year basis, these prices have been lower, and due to which the realization has been lower, because we're already witnessing a subdued demand climate out there. And we have seen some amount of one-time adjustments there on the bottom line performance, because of which it is a tad higher than what the street was estimating. But net-net, it looks like inline set of numbers right now.
Okay, in line set of numbers, the stocks reacted negatively. It's actually throughout the session it was trading in the negative territory. Vikas was also mentioning about the debt which they have reduced. I'm just going through their press release. Of course, the revenues on year-on-year basis, on consolidated basis, it's down 3%. EBITDA margin is at 25%, though the EBITDA on year-on-year basis has come in at 4497 crore, which is down 15%. And these are the numbers which, by the way, the company has given in their press release. They've also realized power debt is to the tune tune of 900 crore at TSPL, which was as per the Supreme Court order. And gross debt, they have said it's reduced by 3279 crore, and net debt to EBITDA is now at 0.9 times, which is lowest among Indian peers. Vikas, you were making a point with regard to debt, which they have reduced. It's reduced by 8,322 crore. Was Street expecting this, or this has come as a surprise?
No, actually, we were not expecting this kind of sharp reduction in the debt. There were some expectation that the debt would come down from the last quarter's level, but this was a sharper than what we were building in.
Yeah, I would just want to understand that you said that only it's the debt performance which in turn has been a tad surprising for you. But if you look at the segmental EBITDA performance, which is the segment that has done disappointing for you in this quarter?
So aluminium, like I already mentioned, aluminium, we were thinking that the lower alumina prices would be counterbalancing the fall in LME prices of aluminium. But it seems that there has been a little bit mismatch in terms of lower cost of production flowing in. So if you look at really analyze that, then you would find that roughly alumina and power were the two major cost items for that. So together these had almost $1,500 kind of the impact on the per ton basis. So
Okay.
that these remain on a higher side.
And what's your assessment for oil and gas division? Has that done in line with estimates? Because that's more than contributes majority of the EBITDA performance for Vedanta.
Yeah, so Zinc India as well as oil and gas business were largely in line. Or rather, I can say that probably a tad better than what people would have been expecting, because in a sequential basis, most of the people were expecting a 4-5% kind of decline, but it's almost flattish.
Because we'll leave it at that. Thank you so much for your time. With that, it's back to you guys. In line set of numbers, disappointment creeping in from the aluminium division. Oil and gas is still in line with estimates.
Okay, so that's Vedanta for you, posting their September quarter numbers, and the surprise was they have reduced their debt by about 8,300 crore. The debt to equity ratio is now below 1. It's at 0.9 times, posting EBITDA margins of about 25%, but no respite clearly coming with regard to stock price movement as we speak. The stock's down about nearly 2%, and just shifting focus back to markets, we're in the green. 11,852 for Nifty. Nifty Bank also recovering from lower levels right now. 30,600 is where the Nifty Bank currently trades. Good time to bring in our market voice then. Ajay Bagga, who's a market veteran, is joining us on the show right now. Hi Ajay, good afternoon. Fag end of the earnings season, Ajay, and so far most of the analysts or market experts like you we've been chatting to, they've said earnings have fared better actually in the September quarter than what the street was expecting. What has your assessment been? Do you think we're in for any sort of upgrade? Also factoring in definitely macro data has been pretty weak in the form of be it IIP number for the month of September or inflation which has hardened.
Yeah, absolutely. I think the macros are looking weak, and they will stay weak at least for another 2 quarters. We had expected that the second half of the financial year will see some kind of growth returning, but those expectations are getting pushed out by 2 more quarters. We are not seeing any investment revival as such, and consumption, which used to be the mainstay of the economy, has been weak considerably. So overall situation not very good. The markets have dissociated from the macro to some extent. There are some reasons behind that. One, the flows have been quite strong. Domestic flows stayed strong throughout the last 12 to 18 months on the back of retail investors coming in through the mutual fund route. We have seen a return of the FIs over the last 2.5 months post the Fed rate cycle changing and emerging markets getting flows. So we have got our set of flows. And third is the PSU banks finally turning a corner and showing some positive results, and that has seen overall the market's earnings increase. But I would be very cautious for the next 6 months. Markets have done well. Hopefully markets will continue at these levels and consolidate. but the economy needs another round of fiscal stimulus, structural reforms to come in, and a lot will depend on that. So if there is hope of that coming with the budget in February, you could see the markets go up further. Otherwise, they could at best consolidate around these levels, and at worst we could go back to lower levels.
Mr. Bagga, good afternoon. What's been the talk of town today is the government's notification to the telcos, or DOT's notice to the telcos to cough up the monies that they have to. Now, what does this do for both the sectors? One is telcos, and then I would also want you to dwell a bit on banks and what does it do for some of the banks which have exposure to these to the debt of these companies.
Yeah, the big risk is, Neeraj, when you push these companies down so much. Bharti, I still think with Singtel as a promoter, and given the level of their cash, their debt to equity they had brought down after the last equity infusion, they may be able to pay that 35,000-40,000 odd crores. But Vodafone clearly, both the partners not in a mood to really bring in more equity. And then at some point you might just say, why not surrender the license and cut your losses rather than keep on infusing money in a bottomless well. So I think that is what the regulators will have to decide, and it will have to be a political decision right from the government's end, because the regulator can't really go against what the Supreme Court has said. But the government can come in and give some kind of a sop to soften the blow and give them some more time to repay. Yesterday's notification talks about 3 months to repayment, to payment of these huge amounts. Those amounts are not there on the balance sheets, and they are loss-making entities. Vodafone made a 5,000 crore loss last quarter. This quarter we are expecting about a 4,000 crore loss. So there's very little skin in the game left, and it will be a very big hit to the country, to the entire infrastructure of telecom, because from about 10-12 players we are down to 4 players, and if 1 or 2 of them again go away and the government player is really not able to invest and not able to grow, and it's in the midst of a huge layoff through a VRS. So you will just have a Reliance Jio left standing, and maybe with a hugely compromised Airtel. And that does not talk well for a vibrant digital economy, vibrant digital India. We have seen the regulator take cognizance of that. Hopefully some on the ground relief will be given. On the banks, Neeraj, it would be a big hit. If they went voluntarily, say for an IBC, declared insolvency, if that kind of a thing happens, banks have more than 1 lakh crore exposure each, and the risk is really Vodafone Idea right now, because you have, as of today, after the 18% fall in the stock price, the market cap must be 8,500 crores. So you don't have much skin in the game to pay 40,000 crores more when you're making such huge losses, and you're losing nearly 10% of your subscriber base every quarter. The services have deteriorated, and overall the financials are just not up to the mark. So I really don't know. This has to be treated as an infrastructure kind of a play, and somebody with sagacity has to step in from the political spectrum and give some relief. Otherwise, situation is looking quite grim.
Well, it remains to be seen whether these telcos get any relief or not. But bigger question is also, most of them are over-leveraged companies, so there's no money lying for them in the banks, Ajay. How do they pay this amount? Because I don't think the banks will also be keen to lend them.
Yeah, banks will be unable to lend. You look at Vodafone, its debt to EBITDA will, if they have to pay this, it goes to something like 32 times. So no banker is able to lend this kind of money. So the money has to either come by the promoters bringing in more equity, or promoters, creating a line which is backed by one of the two promoters or both promoters, giving a comfort and standing guarantors to some external funding. I think those are the only two options apart from some kind of government relief. So situation is bad, and again I would say, just like as you saw in the airline side with Jet going defunct, and now both the airlines are still making losses, there is something wrong in the whole pricing. Yes, you can say these were big boys, these are capitalists, they kept the profits, so they should pony up to the losses. All agreed, the free market should be there, but it's a very dangerous situation if only one or two players are left. Then they will start dictating the prices to the consumer. They will start asking the government, and how will you do your 5G spectrum auction in this kind of a scenario where all the players are very debilitated by huge amounts of loans and very few, very poor cash flow scenarios, and in fact two of them making losses consistently. So I think it merits a very high level discussion. The government has set up a committee of secretaries. Some of the wisest people in the land are looking at it. I'm just hoping something comes by, and the regulators' hands are tied. They have to issue these notices, but hopefully from the political segment some kind of a solution is found that will be best for the Indian consumer. Maybe you extinguish the equities, somebody has to pay the price, but don't let these companies go into bankruptcy and take the choice away from the customer, as happened in the case of Jet, where the capacity went off, and that has had a huge ramification for the overall connectivity in the country.
Okay, Mr. Bagga, always great having your thoughts, and more so today on such a sensitive topic, which is the talk of town. Thanks so much for being with us today and giving us your thoughts.
Thank you.
And that's the view from Mr. Ajay Bagga, as a market veteran in his own right, and talking about a few things that people should keep in mind. Now, before we get the next company in, I just want to mark what all the cooling solution companies might be doing. I think Symphony, for example, and I think Agam Navneet spoke to them yesterday, and they delivered a good quarter, and they were talking about a good quarter. Some of the others like Voltas have done okay, and Blue Star, they have done reasonably okay. Let's talk about Blue Star and market reversal and another income of 10 crores, which aided the company's bottom line, but operational performance was very steady. Let's talk about the quarter gone by with Mr. B. Thiagarajan. He's the executive director of Blue Star, joins us right now on the phone line. Mr. Thiagarajan, good having you. Thanks so much for joining in. And Neeraj here, good afternoon. Tell us what's gone right, because one would have thought that with the erratic monsoons, cooling solution companies will not necessarily have a good quarter. You seem to have defied that trend a bit.
Good afternoon, Neeraj. Thank you for talking to me. The demand for room air conditioners had been steady. The electromechanical projects also order inflow has been good. Most importantly, the professional electronics and industrial segment, industrial system segment also has done well. I hope the same trend continues for the next 4 or 5 months till March. We are optimistic about the FY20 performance.
Mm-hmm. Is it looking like that? We were speaking to one of your peers, well, not exactly peers, a cooling solution, a cooler company, Symphony, but they were saying that despite October and November showing these erratic monsoons, the inventory cleanup has been strong and the demand offtake has been pretty high for them. Have you seen that for your company as well for the first 1.5 months of the current quarter, Mr. Thiagarajan?
It has been compared, when we are comparing with the last year, it will be seen as stronger. Because last year was a very, very bad year. I don't think we should get carried away by that. But having said that, the demand for this particular category of cooling equipment, whether it is room air conditioners or air coolers or deep freezers, water coolers, cold rooms, this has been good. I think it has got to do with the poor penetration.
Okay. And as I look at the quarter gone by, sir, the orders win for the EMP segment. And now that the election overhang is gone, the outlook for that segment for the next, say, 6 odd months, I think the next major election is also a few quarters away.
You would have noticed our order book is very healthy. It is at all-time high of around 2,935 crores. It is 32% higher than what it was last year. What I will be concerned about is the speed of execution. We are clearly focused on the working capital. We brought down borrowings to 189 crores from 463 crores last year. Again, second consecutive quarter where we have dramatically reduced our borrowings. So if you are focusing on the borrowings, the speed of execution is going to suffer. So one would have thought that the EMP segment should have grown by around 20%, and we should have done much more in terms of profits, but we chose to focus on cash flows rather than the billing growth. So the outlook is order inflow is good. Speed of execution is yet to pick up. And that has got to do with the liquidity in the market, whether it is government or private sector in the real estate sector.
Mr. Thiagarajan, I'm just going to take that point forward in terms of payments with regard to the government order. Has there been any delay?
There has been delay. It is not, at a level which it was even a couple of years ago. When the order book grows to that extent.
Okay, I think there is some problem. Okay, I think we've lost the line with Mr. Thiagarajan. We'll try and touch base back. But remember, they posted decent set of number in this challenging environment, as we've seen other companies too in the same space too have posted decent set of numbers. But the margins from the AC segment, even the EMP, which boosted the top line growth, I think both of them on margin front, there was a subdued performance. But some delay also seen with regard to payment from government orders. That's what Mr. Thiagaraj was mentioning. But the stock in today's session has been just about flattish. Remains to be seen whether they've managed or they'll be able to increase the market share in the AC segment going ahead. But let's just pull up this year's chart and check if the stock has given any sort of returns or not. It trades at 800 rupees right now, and it's been an outperformer because this year has not been that great for broader markets. So the stock has given you at least some returns of northwards of 28%.
Well, it's very interesting what some of these companies have done, isn't it, Navneet? I mean, you would expect that monsoon month will anyways not be a great month.
Exactly.
Then there will be some erratic monsoon-led impact.
Mr. Thiagarajan is
he's back with
us. I'll just ask him to complete his point. Mr. Thiagaraj, if you can hear me, please complete your point with regard to payments from the government orders.
Yeah, it is like you have been seeing for other sectors also, the government payments have been very, very slow. So actually, we look forward to a situation where the government payments are improving. Then the speed of execution will be high because we execute quite a few government orders as well.
Talk to us on the margin front with regard to the AC segment, because that's not seen any sort of increase, at least in the first half of this year. Can we expect some bit of fillip to come by in the second half, or it will be subdued?
The margin has not seen improvement, but if you see on a half-yearly basis, we are somewhere around 8.6%. Last year was 8.8 or so. If you recollect, there was a customs duty hike as a part of the union budget. There are some components which are still getting imported, and we had to absorb that cost. But I am not worried about the second half at all. The margin, we should be aiming anywhere between 9 to 9.5% for the cooling power product segment. And in the electromechanical project segment, it should be in the order of 6%.
Okay, 9 to 9.5% in the cooling products. What's the full year target then, Mr. Thiagarajan, with regard to top line and bottom line growth?
In the cooling products, I anticipate the market should be growing by around 10%. Our growth target is 15%. And electromechanical project segment, as I told you, that we stay focused on the working capital management. The cash profits are important there. So I would anticipate around 10% increase. The third segment, which is professional electronics and industrial systems, I think we are back on track there in terms of growth. I think the bottom line should grow at least by 20% this year in that segment.
Okay, so we leave it at that note. Thanks a lot for joining us and all the best to you for the second half of this financial year. Well, that's the management of Blue Star saying that they do expect margins from the AC segment to be in the range of 9 to 9.5% for the full year. Stocks just about trading flattish. Well, this is the fag end of the earnings season. We've got one more management lined up. Next company on the show is Galaxy Surfactants. While the bottom line saw a 46% jump this time around, the margins expanded as well, but the top line saw a degrowth of nearly 5% compared to last year. Let's discuss the factors at play with Mr. Shekhar, the managing director of the company. Hi, Mr. Shekhar. Good afternoon, and thanks a lot for joining us. Degrowth on the top line. Some of the analysts also call your company a quasi FMCG company because you cater to home and personal care segment. And we've been talking how there is consumption slowdown, though challenging that environment. A couple of these FMCG companies have put up a decent show. Was the top line growth impacted because of subdued demand from these companies?
See, the top line growth, particularly in terms of the revenue, is dependent on the raw material prices. You see, we have grown on volumes. For this quarter, we have grown. Overall volume growth has been about 10.2%, aided by 11.2% on performance surfactants and specialty ingredients at about 8.8%. But the raw material laurel alcohol has been, on multi-year lows. The laurel alcohol today rules at approximately $1.04 to $1.1, which is really one of the lowest, or not possibly the lowest, in the last maybe 10 years or so. So, and the selling prices are in a way linked to the raw material prices, and that's although we have grown on volumes, you see, in terms of revenue, you see a decline.
Okay, and so you mentioned 10% volume growth for the quarter gone by. Is that the performance? Is that the number one can also expect in the second half, or it can be better than this?
No, overall, for the entire year, we expect the volume growth to be anywhere between 6 to 8%. What has happened, of course, is that Egypt has come back on track after almost 4 declining quarters. I think Egypt has come back on track. The local Egypt, we have grown by almost 29% year on year. And overall for Egypt, Galaxy Chemicals Egypt, it has been a growth of about 17% or so year on year. So Egypt has come back, and we are also doing well on rest of the world. We continue to keep the momentum in rest of the world, aided by the trend towards premiumization and where our specialty ingredients find use in a very significant way. We have been doing good amount of work for the last almost 3 to 4 years, and we are seeing the results of all those work now. So we expect the momentum on specialty ingredients to continue in the second half too. We do expect Egypt to continue the momentum. As far as India is concerned, India has seen possibly a 7-year low in terms of rural growth. The overall growth for the FMCG sector has been about 7%, and for the home and personal care industry, even a little lower. So we expect the challenge to continue as far as local India is concerned for the balance part of the year. We have seen some marginal recoveries, and we do hope that this particular recovery is maintained. So we do expect overall for the entire year a volume growth compared to last year of about 6 to 8%.
Would you believe, I mean, we were speaking to one more company which had seen that revenue degrowth, Mr. Shekhar, good afternoon, and they mentioned, I think, similar tones about how the pass-through of some of the lower raw materials resulted in volumes looking okay, but overall revenues looking soft. My question to you is, sir, that your margins have gone up, and I presume that must have been because of various factors, including cost management and value-added products. Would that be the focus, since you have a steady state 6 to 8% volume growth, that margins would now improve from where they are right now?
Yeah, when the selling prices, raw material selling prices or raw material purchase prices go down, you do see in terms of pure percentage, the margins as a percentage of top line, going up. And of course, this also will be aided by the increase in growth of specialty ingredients, which a tempo has been maintained and a momentum has been maintained.
So would you believe, sir, that the steady state EBITDA margin performance would be northwards of 13%, maybe 13.5% for the foreseeable future?
So I would say in terms of pure per ton, we would be anywhere from 15,000 per ton to 17,000 per ton. That is the range that we have been for the last almost many quarters, and we would be in that range. So the percentage will depend upon, as I said, the top line, and the top line depends upon raw material prices. They keep, because there is a good amount of volatility. And of course, I should say that, as far as raw material cost is concerned, we haven't seen much volatility, particularly the last almost 12 months is concerned. It has been on a downward trend. And as of now, it is possibly at multi-year lows in terms of the raw material price. Yeah.
Okay, just a word on your two segments. That's the specialty care products, which contributes nearly 40% to your bottom line. How did the performance pan out for both surfactants as well as specialty care? And do you see the contribution going ahead from specialty care increasing to your top line?
Yeah, I think specialty will continue to grow. As I said, this quarter we saw a performance. Surfactants growing at about 11.2% and specialty at about 8%. Overall, it was about 10.2%. We expect both the categories to grow because we, at least as far as the emerging markets is concerned, out of, and India constitutes one of those. India will continue to be a growth story, barring, I do believe that, I would like to believe that this is a temporary phase for India because the forecast for India, when I talked about it last year, was that for the next about 8 years, the forecast for home and personal care industry was a pessimistic 9% and an optimistic 12%. So I do hope that whatever muted growth that we are seeing now is a temporary phase, and we should see the back of this, very soon.
Sir, can you leave us with the guidance with regard to full year top line and bottom line growth? And of course, on the margins, can you sustain the ones that you've posted in this quarter of 13.5%?
I should expect it to be there. So as far as the full year is concerned, we do expect a volume growth overall of about 6 to 8% compared to the last year. We would expect possibly the same mix between performance and specialty ingredients. That is where we would be. And we should expect the momentum of the first 6 months to continue.
Well, we wish you all the best for that, Mr. Shekhar. Thank you for speaking to us at BloombergQuint, and all the best for the quarter ahead.
Thank you very much.
That's Galaxy Surfactants. Well, it's 2:30. Just a quick update. By the way, we've been running that, but should you not be subscribed to the Telegram service of BloombergQuint, do try and do that so that you can receive updates on all of these things in a very nice fashion. You've already been subscribed to WhatsApp, but now you've got to move on, so keep that at the back of your mind. I must say, just as we start our trading wheel full-fledged for the last 1 hour, that HDFC AMC is no longer amongst the top gainers. The last few days it's had a rock and roll run. In today's session, flattened out completely, though a bunch of companies like Ipca Labs, AU Small Finance Bank, which are all still moving up and still trading at new highs for themselves. Good time to get in our technical experts on board. Aditya Agarwala of Yes Securities with us to talk about the charts, and then of course we'll get in Gurmeet Chadha to speak about the fundamentals as well. Aditya, good afternoon. Thanks for joining in. Yesterday there's a big crack, though on Monday there was a sharp uptick as well. Today it's a flat line. What's the trade that you take, either on the Nifty or the Nifty Bank?
So it's more of a consolidation right now that's going on, Neeraj. If I take a look at the index, what it has done after a sharp up move from about 11,100 to 12,000 that the index posted, now it's going through a narrow consolidation. Just that the range has shifted slightly downwards. So on the downside, 11,800 at the moment is acting as a support, and on the upside, 11,900 about 950 is acting as a resistance. So this 150 to about 100 point band is in which the Nifty is oscillating at the moment. I wouldn't play the market. I would just wait wait out for these resistances and supports to take out, then probably I will take a trade in the market. Either if it takes out 11,950 on the upside, then I'll go long, or if it breaks 11,800, about 750 on the downside, then I take a short. Within this band, either I can just add on to the positions at the support levels, which is around 11,800, and targets will be just 100 points, which is 11,900. At the moment, because it's at the middle point of the range, I will not trade the index at all. Be it Nifty and Bank Nifty, both are stuck in range. I will avoid trading them at the moment.
Okay, and remember for Nifty, at least we've defended that mark of 11,800 today. 11,803 is, I think, the day's low, and today being the weekly options expiry, we have seen a lot of put riding coming at the mark of 11,800, and we've recovered, by the way, from lower levels too. But Aditya, I'm not taking any trade on the index. You would wait out for certain levels, but in terms of individual stocks for this afternoon?
So I've got a buy call on Granules stock, posted a decent run up from levels of 95 to about 130, 35. From there, stock clawed back a little bit, and now it's going through consolidation, and at the lower end of the consolidation range around 120, we're witnessing good buying activity that is there in the markets for the stock. So at current levels of 121, it makes a good risk to reward buy for Granules, keeping a stop loss at 115. I'm looking for a northward target of 138. Probably this is more of a positional trade. If somebody holds on to it for a couple of trading weeks, he can see those levels of 138 on the upside. I've got a sell call on Gale Futures. Stock continues to make lower lows, lower highs, and it has now broken down from a consolidation triangle pattern in trade today, and volumes are high in this breakdown that the stock has posted in trade today. So a sell on Gale Futures for targets of 113 with a stop loss at 126.
Okay, so that's one short on Gale Futures and one buy on Granules India. Those are some calls coming in from Aditya. Pull up Infosys. Remember, this was underperforming yesterday when TCS rallied nearly 3 to 3.5%. I think since the morning session, Infosys has been trading and it's building on to the gains. So currently that's sitting with gains of about 2.5%, and it's trading above the mark of 700. The other stock among the Nifty constituents, a heavyweight which has moved higher, is ICICI Bank. That too is sitting with gains of nearly 2% as we speak. And of course, this has been an outperformer, by the way, in the private banking space in the last 1 month. And something like Bajaj Finance, that doesn't surprise you. All the good quality stocks are rallying higher. But Aditya, very quickly, a word on Infosys, now above the mark of 700. Would you take a bet on the long side?
Yes, I would not shy away from taking a bet on Infosys. Place a stop somewhere around 685, and a long trade can be initiated at current levels of 708, 707. My initial targets will be 730, which is acting as a resistance for the moment. If that is taken out, probably that gap of 760 to about 730 might just get filled. So keep a close watch on Infosys, and look at the way how rupee has been falling. Yesterday we witnessed a sharp decline on the rupee. It's been falling one way from 71 odd levels to about 72 and a half towards 72. So keep a close watch on rupee. If it starts to depreciate, probably we can see a spike up in the IT stocks, which have underperformed a little bit. So Infosys will be a bet on the long side, definitely.
By the way, I wonder, just before we get to Nipun Mehta on the fundamentals, want to pull up the stock prices of Bharat Forge, RK Forgings, a couple of them at least. The PTI is reporting, I think there's a PTI story which is talking about maybe some new anti-dumping duty and countervailing investigations against forging companies from India and a couple of other countries. Maybe, just maybe, these stocks could get impacted. For now, though, not showing any such signs. Nipun Mehta, market expert, joins us right now on the show with his thoughts. Nipun, good having you. Thanks much for taking the time out and speaking to us out here. What's your sense, Nipun, when we look at the landscape, we talking about what's happening to telecom and the resultant impact on banks, forgetting that the high quality names are therefore finding an even bigger acceptance, and that's why even on a day like this or the last few, the likes of HDFC Bank, Bajaj Finance, Kotak Bank, etc. continue to rise and shine. More and more reasons, you think, for the market to latch on to those vis-a-vis the others?
Good afternoon, Neeraj, and thanks for having me on the show. Yes, I think sectors, specific sectors have been acting as pressure as far as banking is concerned. Telecom, probably one of them. Clear uncertainty in terms of when they'll be made to pay the large liability that is there. Is there going to be a moratorium that they might get, a timeline they might get, when the 5G auction might take place, and what could be the situation there in terms of bidding, and whether you'll have all of the three or four larger players, including BSNL, whether they would be in a position to bid. I think all of that uncertainty on the one side and the ability to pay up is something that's going to act as pressure, definitely as far as telecom is concerned, but obviously as far as banking is concerned as well. So that concern of, as far as banking is concerned, in their ability not to start opening their coffers and lending in a far easier way is just clearly not happening. You're still not seeing them openly lending or easily lending as far as SMEs are concerned, as far as the mid-sized companies are concerned. Yes, large caps probably, or larger companies do end up getting their share of bank lending, but clearly the mid-sized corporates aren't. The focus is clearly shifting on to retail lending, both for PSUs as well as continues as far as the private sector banks are concerned. So increasing competition on the retail lending side, probably shrinking margins when you compare it with when you include lending by NBFCs as well. And that's something that's going to act as pressure. I think the more important thing is recoveries. And if you're not going to see recoveries coming in thick and fast, that's something that's going to act as a sort of moral pressure as far as PSU banks are concerned. And you might not see the coming back of profitability over the next few quarters unless there are adequate recoveries that we see as far as PSUs are concerned.
Okay. Well, it's certainly showing in the way some of these companies are reacting as well. Nipun, much spoken about today already, telcos, so I won't dwell there. But just wondering, do you reckon that investors, I'm not asking for a buy or a sell recommendation here, but do you reckon that investors would take the view on the tower companies in the same fashion that the view that they're taking on one of the two incumbent telcos, that business would drop, tenancy ratios could drop, and therefore best not to try and catch a falling knife? Bharti Infratel is showing signs of that already in the stock price, I mean.
Sure. I think that's something that's going to act as constant pressure as far as investors are concerned. Best not to put your hand under a falling knife. I think the risks continue to be there. Pricing pressure will continue to be there. When you see the incremental business where revenue is likely to get generated, and which, let's say, Jio has announced the fiber optic business that could be there. That's not something where the other telcos are still in a position to start competing in a big way. And that's not where revenue is going to come thick and fast as far as the additional business is concerned. So our sense is, yes, there will be pricing pressure. There could be further movement happening as far as subscribers are concerned. Unless the incumbent telcos are in a position to raise ARPUs, profitability is going to take a hit. So I think our sense is one definitely needs to wait and watch till the government payment issue is out of the way, and there is more clarity on what's the kind of bidding that they might be in a position to do as far as 5G is concerned.
Okay, we'll watch out. Bharti Infratel is still the top loser on the Nifty. Had Aurobindo Pharma been on the Nifty, it would have been the top loser on the Nifty, because that stock too is down about 8.5 or 9% and you know, yesterday it held out when the rest of the pharma pack was crumbling under pressure in today's session. That's not the case. The AVAT function will also show you. My best guess is that the volumes today on Aurobindo are substantially higher than what the 20-day average would be. My guess is, just looking at this 15 million shares volume, that it would be higher. But as we get ready for that, would you be able to give a chart check here? Maybe not as a trade, if not that. What are the kind of levels or what are the kind of downsides that you envisage here?
So there's definite weakness, and you just rightly pointed out the selling today has been on enormous volumes. I see about 150 lakh shares already traded on the counter today. So it's like 1 crore 50 lakh shares down, which has taken the stock down. So that's significantly high volume than what the stock generally trades at. Talking of levels, immediate support level is at 380 for the stock, from where stock is just just did held on to in the morning trade. If it breaks 380, I'm looking at a downward target of 330, and the chart pattern doesn't suggest there is any sort of a probably an uptick or a short covering rally that can come through in next couple of trading sessions. So my sense is this gap down opening which we witnessed today on extremely high volumes is likely to continue in the coming trading sessions as well.
Okay, that's Aurobindo Pharma for you. And remember, so far the argument has been this is the cheapest pharma company that's available for you 7 to 8 times, I guess it's trading at. But the sort of question marks that remain with regard to the observations from US FDA for its Hyderabad facility remains to be seen. Now, going ahead, what sort of impact can it have on the financials of the company? And it's trading, Neeraj, at its 2014 levels. It's at 5-year low. No respite for this one.
No respite. And you know, Navneet, it's just that argument takes me back to good performing and poorly performing cheapest stocks. Tata Motors for the longest time remained the cheapest stock on the Sensex and the cheapest auto stock, and arguably still remains that.
Remains an underperformer.
Even on the IT pack, like for all the kind of growth and the wealth creation it may have done as well, HCL Tech for the longest time remained the cheapest of the top 5 IT majors. And
it is still the cheapest, right?
Yeah, maybe Tech Mahindra, between Tech Mahindra and HCL Tech, there might be a battle, but yeah, I think HCL Tech, unless I'm very wrong and unless you're very wrong.
An article, therefore I was just...
Yeah. So it is still so that's the point, and somehow these stocks maybe continue to remain cheap for a reason. I don't know. I mean, I'm not saying Aurobindo Pharma will remain that way, but today's news doesn't give any kind of respite.
Yeah, and I think the biggest example you gave is Tata Motors. I remember at every level you had analysts coming up and saying it's a buy, it's a buy.
It's the cheapest Sensex stock. I remember the headline so many times.
But let's see, I think the quarter gone by, at least there was some ray of hope with regard to the performance that we had seen from JLR. Let's see if going ahead that can be replicated or more or improved rather than what they posted in the September quarter. But we were talking about the pharma space. Pull up Cadila Healthcare. I think that's seen gains of 3% today, 2.5 to 3% higher, 4% actually now, 234. And I guess they've acquired the remaining 15% stake each in their subsidiary Zydus Technologies, also Zydus Novel Tech. And now these two companies will become wholly owned subsidiary. Maybe on back of that news, we are seeing some buying momentum on Cadila Healthcare. What do you make of the move on the charts, 4% higher?
It's a surprise move and a welcome move as far as Cadila Healthcare is concerned. Till yesterday, a stock was making lower lows, lower highs. There's a sudden U-turn in trade today. So as of now, it's formed a bullish engulfing pattern, which is an encouraging pattern for the bulls. I'll just wait for the stock to trade above 235. That is an immediate resistance hurdle. That also is the 50 DMA for the stock. So if it manages to trade above 235 on a sustained basis, probably yes, I'll take a bet on the long side. A short covering rally just might come through, which will take it higher to levels of 245 to about 250 on the upside.
Okay, let's close the loop around the pharma space. Nipun, fundamentally, if you've had a look at the earnings so far from these pharma companies, no respite. I guess the pricing pressure still continues, and the sort of warning letters or the observations that they've been receiving in Form 483. Last 3 to 4 years, the Nifty Pharma Index has not given you any sort of returns. Do you see the tide turning? Is there any valuation comfort here?
I think it's even though valuation comfort to a degree might be there, I think the overhang and the headwind that is there as far as this sector is concerned will ensure that any upside that might come by, again, very selectively on select pharma stocks is also going to be temporary to a degree. If you really see and observe, besides just the pricing pressure and the US FDA issues that are there, you're really seeing more of the MNC companies not getting involved or not facing these headwinds as far as US FDA is concerned. So incrementally, most mutual fund schemes seem to be switching or shifting from a lot of these companies, pharma companies, which have business in the US or have US FDA issues, onto a lot of the MNC companies like an Abbott or a Sanofi, which probably is a far safer bet in terms of a gradual uptick in terms of growth that they're seeing both on the top line as well as profitability. So our sense is that's something that will continue. You will continue to see pressure as far as the entire pharma space is concerned. Yes, selectively, when one or two of these companies have positive observations coming in from US FDA, you see an uptick, but that's in very few cases, limited cases. Also, whenever you're seeing event-based price movement, like you're seeing today in one or two of these cases. Other than that, our sense is the space will continue to underperform for some more time.
Okay, Nipun, as always, appreciate you taking on the time and speaking to us at BloombergQuint. Thanks much for today. That's a view from Nipun Mehta. Now let's get in one more management. Dixon Technologies, they reported the highest ever quarterly sales. Revenues up a whole 89%, net profit up 2.6 times, and margins too steady state at 4.5% versus 4.4%. EBITDA up about 92% too. Let's get in the management. Saurabh Gupta, the CFO of the company, joins us right now on the show to talk about the numbers. Saurabh, congratulations, good set of numbers. What's clicked for you?
Thank you very much. I think so. It has been our growth has been strong, mainly on account of new customer acquisitions that we have done over the last 6 to 12 months, and larger share of orders from existing customers. So that twofold strategy has really worked for us.
I remember talking to you when the Amazon Prime sales and the Flipkart sales were over, and how Xiaomi and all of that contributed. But can you give us some granular details? Because I look at the segmental performance, almost everything seems to have a robust number. What has clicked? What has been the best performing segment, which is likely to continue? And in terms of the contribution that each of these segments does to your EBITDA and bottom line, which is the one that is doing the best?
So we have a strong order book across all the verticals, but this quarter too, I think so, there has been a stellar performance by consumer electronics segment, where the year-on-year revenues have grown by almost 100%, and the profitability has also seen quite a significant improvement as compared to same period last year, and followed by home appliances business and lighting business. So all these three verticals have done really well, and the mobile phones has also given a decent performance.
Saurabh, just looking at the performance of consumer electronic business, of course the growth has been great because of the low base as well. But if you look at the margins, I guess across segments, I think there is margin expansion, but we've not seen for consumer electronics. What's the reason? And also ODM share for this one has fallen to 4% on year-on-year basis.
Yeah, so basically margin is a function of the selling prices also. So if you are selling more higher categories TVs, which is like 43 inches, 50, 55 inches, where our selling prices to our customer is higher. So the margin profile looks lower because we get contribution per TV set or per LED TV set. And but if you look at the absolute EBITDA, so that has gone up significantly both in quarter as well as in the first 6 months in comparison with the same period last year. And if you look at the ODM share, in absolute numbers, the ODM has gone up, but your main anchor customer is on the prescriptive side. So they are contributing almost 65-70% of our revenues. So as a result, the percentage of ODM has come down, but in absolute numbers, the ODM numbers have also gone up.
Okay, and Xiaomi is contributing nearly 60 to 70% currently to the revenues?
That's right.
Okay, so is there any, I just want to understand, is there any concentration risk then for a segment where majority or more than half of the revenues are coming from just one client?
So that is a continuous strategy for us to acquire more customers across all the verticals. And we have been able to do that successfully in both washing machine, which is home appliances, as well as lighting segment. You are absolutely right. The client concentration is high in the LED TV segment. So we are in advanced stages of closing some of the agreements with some more customers, and we'll soon get them on board. So that would reduce the client concentration going forward.
So far, Saurabh, the numbers of course are looking good, and it's also coming on a low base. I'm sure your shareholders would want to know whether the same growth rates can be sustained going ahead in second half. Your presentation has stated that free cash flow generation of 65 crore in the first half has reduced the net debt to about 52 crores. Is this momentum going to continue?
Yeah, so we have a strong order book across all the verticals, and we have signed with Samsung on the feature phone side as well. So that would also start delivering profitability for us going forward. So I see this momentum continuing. However, Q3 generally is slightly a slower quarter historically because post-festive season. But so that would have a slightly seasonal impact, especially in our home appliances and LED TV segment as compared to the earlier quarters. But we see that going back to the normalized levels back in Q4. So we are looking for a strong growth this year, and the order book is there with us.
I'm guessing because of this cash flow generation, and Saurabh, you will, one, not raise any fresh money, and two, probably retire even more debt in Q3 and Q4, net debt?
Yeah, absolutely right. I think so. There is a huge amount of focus on generating free cash flow and managing the working capital. So as the profitability continues to show a similar momentum, I think so this debt levels will either remain same or marginally come down.
Last question though, Saurabh, and that is how all great startups want to become better with maintaining or bettering the return ratios. You already had some commendable numbers on the ROC and ROE. Where do you as a CFO aim to take these two over the course of the next, if not the 2 quarters, then 2 years?
Yeah, so we see this ROCs to inch up. We see that any new capital investment that we do, whether on backward integration or setting up a new, setting or expansion of capacity or setting up a new business venture, it will always be focused on generating ROCs upwards of 25%. So we think that this ROCs of anywhere 30% kind of a number at a company level should be maintained. However, it will keep going up as the scale and size increases because we'll have economies of scale benefits. So we would want to take it to, say, those 35, 36 levels which were there at the time of IPO.
Okay. And any guidance that you can leave us with at the end of Q2, how would you presume FY20 could look like? I mean, the estimates are pegged at about 5,000 odd crores for revenue and about 120 odd crores for the bottom line. You think these are achievable numbers?
I can't share some specific numbers, but I would say, yeah, the growth outlook looks good. We are very confident that the revenue this year should grow by at least 50-55% against same period last year, and the profitability growth should be at least 5 to 7% bits higher than the revenue growth. So I would say the numbers that you mentioned, broadly we are there. I think so it should be similar or much slightly lower than the numbers that you had mentioned.
Saurabh, just one last question. Any new clients that are going to come on board in the second half?
Yeah, so we have some new customers coming across all the verticals. As I mentioned, we have signed up. We have some new customer acquisitions in LED TV, in semi-automatic category, which we are operating presently. We are also now getting into the top-load fully automatic category, where we have signed up with a couple of more customers there. And that facility in Tirupati should be operational by Q3 of next financial year. Lighting business, we are now globally competitive, and there will be a significant export play on the lighting side. So customer acquisition is a continuous strategy, and that we will continue to see that happening over the next 6 months as well.
Okay, Saurabh, we'll leave it at that. No, thanks a lot for joining us, and all the best for the second half as well. Well, that's Saurabh Gupta of Dixon Technologies. What a show. Everything's working for them. Good return ratios, lean working capital cycle, and continuous effort to acquire more and more clients, backward integration. I think all these factors are something which most of the brokerage reports needed to highlight. And what a performance this one has given this year. It's, of course, reacting to the numbers today, but I guess this year itself, the stock has been an outperformer. Yeah, and the good thing for them is, Navneet, I remember a conversation when the Flipkart sales and Amazon sales got over, is that Xiaomi is doing very well, which is a key client for them. For the TV segment. Yeah, when their clients are doing well, it probably impacts them even more. 11% now. But the management, and it's happening now with a bit of a spike, and the management reiterating that they would actually aim to take the ROC to northwards of 35-36% from the current 33%. This is quite commendable as well. No surprise that the stock is doing what it is doing right now. Really good going. Okay, Aditya, quick 30-second view, if you can give us on Dixon Tech.
Absolutely, it's risen like a phoenix to talk of it. So the low was around 1560 in the month of August, 30th August. We are in the middle of November and it's trading at 3,300 almost. And there's more to go. Look at the volumes. It's up on 3 lakh volumes in trade today. My sense is it's not far off before the stock touches levels of 3,700. Probably next 3 to 4 months we can see stock trading at around 3,650 to about 3,700.
I must say, and we'll probably try and do something around this in the next few days, Navneet. The back-end manufacturers are really shining.
Yeah.
Hindustan Foods, back-end manufacturer, until last evening, and I don't know the price today, but was trading at fresh life highs. And again, back-end manufacturer of all consumer goods. Dixon, back-end manufacturer of electrical appliances, and a clutch of others who are doing that. We normally shunned as how will they get the margins, how will they get anything else.
Surfactants, we just spoke to them. So they are actually a quasi-FMCG player supplying to home and personal care companies, and managed to not only sustain a little bit of margin expansion seen from their end as well.
Yeah, companies and markets seem to be loving some of these and trading at 52-week highs for them. So good going there. Now, before we hear out S Naren, some numbers on your screen. Grasim, the Q2 net profit at about 526 crores versus the estimates of 659 crores. So the numbers, the bottom line numbers at least seem to be lower than what we were working with. We'll get in the other details going. As of now, I have the net profit numbers, which look marginally below what the street was working with. I dare say the con call from Grasim would be important, and we'll give you details about that, because they might well speak on Vodafone and the capacity of being one of the promoter entities and related parties. So it'll be interesting to see what they say there. But the bottom line numbers on the face of it, just for Q2, seem to be below estimates. Revenues at 4797 versus estimates of 5060 crores. So again, there too, there seems to be a bit of a hiccup for Grasim, both on the top line and the bottom line. And the stock, for now, duly reacting. These might be initial reactions. Let's wait for some other details to come in. But the face of it, the numbers don't look all that great. We'll wait for the margin numbers and the other numbers to come for our team to calculate. But the top line, bottom line numbers certainly below estimates. Let's wait and watch what happens to Grasim during the course. Sorry, Navneet.
We've got the press release here. The revenues, of course, these are consolidated. That will include the other verticals as well. What you need to look for is the viscose business, which is the standalone performance. And production and sales number there have increased by 8% is the production, which is higher on year-on-year basis. And the sales volume is up by about 5%. So, and the net revenue for the quarter stood at 2431. EBITDA for the quarter from the viscose business is at 381 crore, and they've stated that the global prices of VSF softened further on account of significant capacity additions in China and Indonesia, and ongoing US-China trade war. Because of that, that could be impacted, Neeraj. But of course, on consolidated basis, revenue is up 3%, EBITDA up 7%.
Yeah, the numbers leave a bit to be desired. I don't know if they'll be having a big move in the session. So let's wait and watch. About a percent odd lower in trade. Gurmeet Chadha is with us. I'm told he's from Complete Circle Consultants. Gurmeet, good having you. Thanks for joining in. Just a brief word on Grasim. I've just read out a couple of numbers, me and Navneet. What do you make of the numbers, prima facie?
Looks weak, Neeraj, as you pointed out. They've just come out, so I've just looked at only from an headline perspective. But don't look that great from whatever little I've seen. Probably can come back to you on this and see in more detail how the quarter has panned out.
All that impressive. The stock virtually doing nothing, just about 1% lower. But as we said, the numbers, on the face of it, below estimates. The top line numbers too, expenses were 5,000 crores. I think the numbers have come in at least 4% lower. So slight miss there for Grasim. Okay, while Grasim hasn't looked all that great and Dixon has looked very good, let's try and figure out if Dixon has made it to Sharad Dubey's list of the Fab 4 stocks of the day, or are there some other stocks? Sharad, what do you have for us?
Hi Neeraj, the first stock I've picked up is based on earnings, and it is a really good set of earnings. This first stock is Suven Life Sciences. Stock is up more than 10%, seeing its biggest intraday gain in almost 10 months, with revenues rising almost 3 times to 274 crores, and the net profits rising almost 4 times to 72 crores. This is based on the segmental performance of its CRAM segment, which has really done really well. The CRAM segment is a contract manufacturing segment. Up next, we are having Muthoot Finance, which is up 9.4%, which also came out with a good strong set of numbers, with the gold loan AUM rising 9% on a year-on-year basis, and also the spreads expanding by 229 basis points to almost 14.25%, which is driven by higher collections. Up next, we see is VST Industries, which is up almost 7% after Radhakishan Damani increased his stake in the company by acquiring almost 1.75% stake. This was reported in the Bulk Deals data, and now his stake actually has increased from almost 26% to 27.7%. Apart from this, I think HDFC Mutual Fund also sold 2.7 lakh shares. And the last stock of the day is Apex Frozen Foods, which is up almost 9% after it delivered a strong set of operational numbers, and also the lower cost of materials did aid the margins as the EBITDA rose by almost 49% and the margins expanded by almost 500 basis points to 13.8%. So we'll be also watching out for Waterbase as it comes out with its number, as shrimp stocks are in focus. Back to you.
There certainly are. Avanti also posted a fairly decent set of numbers. We've already seen Apex Frozen Fruit do that, and yes, we will watch out for what Waterbase has to report as well. So, well, good set of numbers out there. Gurmeet, any thoughts here on these shrimp stocks or shrimp-related stocks, the three names that we spoke about?
I think Avanti is something I have been tracking and we have been discussing, Neeraj, and I think they've done well. I think the stock also took a lot of beating on weak numbers which we saw in previous quarters. I think the home brand is where they, I'm not recollecting the name, is where they actually didn't do that well. But looks a good space, to be in from a medium to long term perspective. We've seen a lot of action, especially in food processing, especially in people. So if you remember, Mr. Damani also picked up stake in food and in about 2 quarters back, and we saw the the prices hitting upper circuit and then normalizing. So there is some action, into these under researched, under penetrated subsectors of the consumption space. So Avanti is one which we track. It's also one of the large holdings in one of the PMS which we refer to our clients, which is the Motilal IOP, which is the India Opportunity Portfolio. So that's one stock where we are long on at these price points from a medium to long term.
Okay, and some numbers on your screen, by the way, before we get to the chart of the day. Apollo Hospitals, the revenues at 2460 crores, the bottom line at 90 crores versus estimates of 105 crores. The chart is all over the place. It's had a very volatile session, where the revenue numbers marginally higher than what the estimates were on Bloomberg. So that's probably holding the stock up about 1% and a quarter for that one. Let's wait and watch what happens on this one during the course of the next half an hour of trade. Okay, before we move any further and try and talk about some news with regards to some companies. Okay, I think we've got some big news on the screen, so the chart of the day will have to wait for a bit, because I think what we're getting from the agencies is the Indian government is set to mulch cutting stake in Indian Oil or IOC to below 51%. Remember, from what I understand, this is not a divestment drive as much as it is cutting the stake, because currently I think they hold slightly over 51%, 51.5 or thereabouts. And now this is news-based reports on Bloomberg saying that Indian government is said to be mulling cutting the stake. No definitive thing there, no definitive statement from the government side, but certainly got an IOC excited all through this while. We've seen comments on BPCL and divestment being there. Now we're seeing that there might be, via ETFs or otherwise, ETF route or otherwise, there being a cut on the stake to sub 51%, which is quite telling too for this space at large. Gurmeet, you want to come in on this one? This is just the initial flash that we have, but it says that there might be a cut of stake to sub 51%.
So near there would be. I think the question here would be how much time frame and what institutional capacity government has to execute the strategic divestment in terms of the names we have been hearing. And if you recollect, I've always been contrarian and positive on HPCL and BPCL when we saw prices and then at valuations almost maybe lower than book value. When we had that government intervening in prices. The only risk remains is that if there is a fiscal slippage where the probability is very high, and that's why tobacco companies, oil marketers, and that's where you can't really take a very long-term fundamental view. But tactically, yes. In fact, we have made a list of special situations, which both on the MF and on the direct stock sides, where we are asking clients to get into some of the better run, PSUs where there is high probability of strategic divestment taking place. It includes BPCL, HPCL, BHEL, Container Corporation, and a few more. In fact, there are a couple of mutual funds which we've been identifying, which are only PSU equity funds, including some of the ETFs like CPSE ETF. I think it makes far more tactical sense than going after names which are beaten down because of the governance issues and related party transactions. So we are more recommending this as a basket, because you have to be tactical and your entry exit has to be better. I won't say timed, but better executed. So it's better to go for a basket in this space. And we've seen so value unlocking potential is humongous. I mean, even at these prices, the oil marketers company, if things go as per plan, there could be 50, 60, 70% upside.
Yeah, well, the point is well taken, that because of this interest around the oil marketing space and the whole divestment talk there might be easy to take off sell some stake in some of these companies like IOC, as opposed to try and sell some of the beaten down names, be it in the metal space or otherwise. They don't have the takers right now. They'll probably have the takers at the upper end of the cycle. Right now, go for companies in which there might be some benefit. Rahul Mohindar is with us. Rahul, we want to talk about all your strategies, but just one quick update on these oil marketing companies and the kind of trends that they've shown. IOC today is up and about on this piece of news.
Good afternoon. I still think if you look at IOC from a slightly longer term orientation, at least give it a year odd, you are likely to see higher levels. And the reason I say that, Neeraj, is let's look at the price action ever since probably October. We've held that 110 to 115 level, very solid support for IOC. We've kept bouncing up from there. So I think one is the support is established. I think secondary is the price action that you're seeing today, of course, is news driven. But I think what will happen is if the stock starts trading above 140 and we start convincingly closing above that level, we would really break out in terms of the short to medium term. So I think I'd hold my horses here. If you're a short term trader, let 140 odd break out, and that's when probably you will see some traction. But if you look at a BPCL, if I may add to that, I think at this point, you are not really in a position to take a short-term trade more from a risk-reward perspective, more from the fact that we've actually had that kind of huge run-up. So again, if you're a short-term trader, I'm not going to be looking at OMCs at this point.
Okay. So government holds around 51.5% stake directly, and LIC, that's Life Insurance Corporation, that's holding another 25.9%. And as per the reports, government can look to sell as much as 26.5% holding to raise about 33,000 crore rupees, while still retain indirect control in this oil marketing company. And as you can see, the stocks come off the high levels of the day right now. Yep, it was up 4 to 4.5% and just up about 0.7% right now. That's IOC for you. Moving on back of that news that the government could look to reduce its stake of about 51.5%. Let's see. We'll wait by for more details on that front.
Yeah, we'll be very interested to see the timing of this one as well, Navneet. Yeah. Right now, we just have this news that is mulling doing that.
I think there's a cabinet meet which is coming up, so maybe they could be discussing 2-3 days back. Also, there were reports how maybe something on BPCL front could come out, but that meeting was
yeah, so BPCL would be the divestment route. This one
cutting stake.
Yeah, just cutting stake. But let's get in, gentlemen. Let's get in our colleague who from Bloomberg, who's broken this story. Devjit Chakraborty joins us right now with more details. Devjit, what are you gathering?
What we are gathering is that the government has kind of decided now to bring down its direct holding in Indian Oil, the biggest Indian refiner, to below 51%. Although it wants to retain control in the refiner through the other state-run entities like Life Insurance Corporation of India, ONGC, and Oil India, which together hold more than 25% stake in Indian Oil. So that gives the government headroom to bring down its holding as much as 26% near about, and still retain control over Indian Oil. What we are hearing also is that the cabinet is likely to take up the issue of bringing down government control in some state-run entities below 51% as early as next week, and that would include Indian Oil, as well, and this disinvestment is likely to happen through the ETF, and the ETF which will have IOC is expected to start in January. So from January through March, possibly the government holding, direct holding in Indian oil will come down below 51%.
Okay, Devji, thanks so much for putting that into perspective. As early as next week, but the stakes would come out post the launches of some of this via the ETF route. Important piece of news, IOC getting excited and then coming off as well, but still pretty important and pretty interesting. Okay, very quickly, before we get in Rahul Mohindar's ideas as well, let's talk about how the consumption slowdown that Navneet was talking about is starting to hurt some of the suppliers. Aarti Industries, which manufactures specialty chemicals for consumer manufacturers, saw its revenue drop for the first time in nearly 4 years. Yash Upadhyay is here with more on that story. Yash.
That's right, Neeraj. Like you rightly mentioned, the slowdown has not spared even the chemical companies. First, we had Vinati Organics the day before yesterday, and yesterday we had Aarti Industries come out with their numbers. And for the first time in nearly 4 years, that the company has reported a decline in its top line for the September quarter. So their revenues for the second quarter came in 22% lower, and this was the last seen in the third quarter of FY16 when it fell by about 2%. Now, while the numbers aren't exactly comparable on a year-on-year basis because of their surfactants business, even on an adjusted basis, the management told BloombergQuint that their revenues are down almost 17.5%. So this is one of the longest ever drop that we've seen for the company in a very long time. Now, the main reason for this is the continued weakness in their global agrochemical business as well as the automotive division. Together, these two segments account for nearly 40 to 45% of its overall business, and there we've seen continued pressure coming in the last quarter or the first quarter of FY20. The management had cut down on its guidance as well. So we are seeing clear pressure emerge on their operational performance. Well, despite their revenues coming in lower because of the higher share of the value-added products, we've seen margins improve. But all in all, it was a disappointing quarter for the company, and that's the reason why we are seeing some amount of weakness in today's day of trade as well. Having said that, 13 out of the 17 analysts tracking the counter have a buy rating on the stock with a consensus return potential of almost about 7 to 8% from its current market price. So watch out for Aarti Industries.
We will, and we had a very nice conversation with the management as well. Do log on to our website or try and hunt on YouTube for this interaction as well. They've spoken fairly candidly about what could happen in the quarters ahead. Before we get in, what dealing rooms are recommending in the session today, a quick check with Rahul Mohindar for some of his ideas. Rahul, we'll take in a closing strategy too, but any stock that's popping up on your screen that you want to talk about right now, or maybe an index view?
Well, I think immediately, I'd look at stocks like SBI, ITC, Coal India. These are all on my buy list. Well, Coal India is on my sell. I apologize. So SBI and ITC, let's go over those recommendations. For a 320 target, I'd buy SBI, 296 being the stop loss. ITC 265, a reasonable short-term target, 248 being a stop loss. Coal India looks negative. I saw that break down key level. So I'm going with a 196 target on the downside. I'd sell short with a 206 stop loss. Other stocks coming up on my list, I've seen a decline on something like an RBL Bank. A good opportunity, in my opinion, to kind of play contrarian and buy, on this decline. So that would be one stock which one could buy with a quick stop loss. So at the current levels, with a 314 stop loss, worth taking an attempt on RBL.
Okay, very interesting, and some interesting calls as well given by Rahul Mohindar. Let's try and figure out if dealing rooms are giving some interesting calls as well in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, good afternoon. SRF is one of the stocks that's been spoken about today. It's trading rather muted over the past few days, but decent volumes. Dealers indicate that at lower levels, some of the HNIs are accumulating. Post the numbers has actually rallied almost close to 7 to 10% already, so there is enough traction that's happening on the counter. So when live trading at record highs, there's a buzz of a potential corporate announcement that could come in on the counter, so that's something that is keeping the stock abuzz. And finally, DV's Lab is the last one. There is a buzz of a potential US FDA inspection that is there on the Unit 2 of their Vizag facility, and that is keeping the stock under pressure. But Yatin, what do you have for us?
Darshan, a couple of stocks to talk about, and Z is one stock which is under pressure today. Dealers, are recommending that on the basis of technical trends, a close below 282, 285 would possibly trigger some bit of selling pressure, and hence they are recommending a sell today, buy tomorrow kind of a strategy on Z. Apart from that, watch out for UPL. This stock has been under pressure since the quarterly earnings, and dealers do indicate that even at these levels, the domestic funds are sellers in trade, almost 1% lower for UPL, but on decent volumes of over 22 lakh shares. And in the cash segment, HNIs are said to be buyers in Motherson Sumi. Their quarterly results were healthy. The stock has been bouncing back from levels of 110, on the lower side a few days back. So this is one stock which is currently on the dealing room radar from the HNI side.
Okay, we'll watch out for all of these. Thanks so much, Yatin, as well as Darshan. The top gainer on the index right now is ICICI Bank. It's back to 500. Gurmeet, ICICI Bank and Axis Bank, yesterday, the last 2-3 sessions, they came off a bit because the market believed that what if there are some issues with regards to telecom or otherwise, or maybe there are expiry date led pressures, but there was some pullback in those names. ICICI Bank has bounced back very, very smartly. Would you be a buyer here, Gurmeet? Would you be an investor in ICICI Bank, or would you maybe take an Axis or an IndusInd out there?
So, considering the sharp run up, we've been discussing ICICI Bank for last 2 summers, Neeraj, if you recollect, and we've been talking of ICICI twins of late, which is Lombard and the bank doing well. So I think I may not want to incrementally add, considering the run up from almost 350 levels to 500 levels, the way the stock has gone up. But I think from a long-term perspective, and I talk about 3 to 5 years, I think another quarter or two, and I've been saying this, you will see more re-rating. It is still at about 2.7, 2.8 times book. And as I don't see any reason, if they continue to show improvement in asset quality, their CASA ratios are now as a percentage of book even better than HDFC Bank. The NIMs are expanding, credit costs are under control, so all parameters doing well. But so if I were to go and not put fresh money to work, you're right, Axis after the fundraise looks good. I think their focus on fee income impresses me the most. They're really trying to go granular as far as even the third-party products are concerned, which is MF, insurance. The focus on CASA and deposits is very, very welcome. If you want to go a notch up, maybe DCB looks a little better to me. I think that expansion of branches network is over. They're already sitting at about 330, 340 branches. If you see the loan book, that's like 24,000 crores, and 70% of the loans are below 3 crores. In terms of the types of loans, 40% of the loan is again mortgage, another 20% is SME. So it's a nice breakup. I think you will see the operating ratios improve. The risk rewards are favorable. So maybe it's a time right now to may not hunt for the beaten down names in the banking space without taking names, but maybe go a notch up, pick up a tier 2 bank which is regionally very, very strong. City Union, DCB. I think they make a lot of sense right now from a risk reward perspective.
Okay, so those are some picks coming from Gurmeet with regard to the banking space. But just 10 minutes to go for markets to shut shop. Let's get you some closing strategies from our technical experts. Rahul, let me come to you. Any BTST or any STBT for tomorrow's session?
I think one stock which again attracts me is Maruti, and the kind of we're trying to see a bit of a comeback today, and we're closing pretty sharp. So with a stop loss of about 71.50, one could look at buying Maruti. I think one should head to about 74.50 to 7,500 over the next session or two.
Okay, that's a buy call on Maruti Suzuki. What about you, Aditya?
So I'll go in for Granules. I'll stick to Granules. Stock is trading at the high point of the day. There's good volume activity that I see. So one can actually do a BTST in this as well if one wants to. Again, an immediate target will be 132. If somebody holds on to it, probably I'm looking at an auto target of 138. It definitely looks on the cards here.
Okay, so buy call on Granules and also Maruti Suzuki. We've not discussed Muthoot Finance so far, one of the top gainers in today's session. Of course, the numbers came in yesterday. We also spoke to the management, which said that in the second half, they do expect AUM growth of about 15%. But Gurmeet, the gold financing companies, be it Muthoot or Manappuram, have been putting up a good show. I was just looking at the data as well. Just a trend cropping up where FI holding in the last 4 quarters in both these companies has been going up. do you feel that both the companies trading around their 52-week high have more growth potential going ahead?
I may not put fresh money to work, Navneet, on gold financing as a space. Also, and I don't want to be naming any, but I have my reservations on the governance standard of some of the gold finance NBFC. So I'm not a buyer in this space, irrespective of the surge we have seen both in terms of, and I think there will be a bit of a reset as far as the asset book is concerned after a tough period we have had. I'm more keen on looking at some of the NBFCs which got beaten down because of more perception issue than actual risk in the balance sheet. Some of the names which better parentage, great deposit side, liability side franchise, something like an L&T, a Mahindra Finance. So those are the names I probably would be more comfortable from a medium to long term perspective. I think, and we have discussed this, I think HDFC Limited to me looks the most attractive. I think it hasn't moved much. I think the has been vacated in the housing space by some of the issues we have had. We have very limited play there. The loan book is 5 lakh crores, which is inclusive of the sell down to HDFC Bank. The value of subsidiaries just keeps going up, whether you look at AMC Life, bank. I think so. It's a twin play there in terms of holding company play and the core mortgage housing place. The loan book is still 75% belongs to individuals, so very little exposure to the developer loan. So I think that's one stock which could really surprise even in a short to medium term perspective.
Okay, let me just take a technical check, but considering the stock has seen some long positions also on the future side. Rahul, 33% higher when you look at the open interest for November futures at current levels. Would you take a bet on Muthoot? Rahul, that question's for you. On Muthoot Finance, would you take a bet at current levels of 712? Okay, I don't think he's getting my audio. Aditya, what about you? Would you take a bet or would you advise booking profits?
I would rather look to book out profits somewhere between 720 to about 740. Limited upside I see after this 10% run up that the stock has posted today. So if somebody's holding on to it, look to book out profits somewhere around 720, 735.
Okay, book out profits at levels of 720, 735. Gurmeet, before we thank you, fag end of the earnings season, a lot of numbers have come. Anything which stood out for you? Anything that you'll recommend our viewers to buy?
I think two of them stood out, and I think this is a time you take out, things, in a tough period, which are the ones who are doing well, gaining market share, increasing margins, giving good guidance. I think Dixon came with a fantastic set of numbers, and we've discussed that this is a serious long-term play. If you see the consumer electronics and appliances globally is growing 8%. India, I think that segment is likely to grow 20-25%. You talk about EMS, which is electronic manufacturing services, and ODMs. I think that space we are likely to go at 30-35%. And just look at the client list they have. I mean, you really, and Neeraj made a point that the clients are doing well and they're adding more clients. So looks, I know it's doubled, but if you take a long-term view, this seriously looks a long-term play. The other play is city gas distributors. Great set of numbers from Gujarat Gas. IGL reported another, I think it was 12th, 13th consecutive quarter of volume growth. MGL had a bit of an issue because of some supply disruption. But again, great long-term play. More and more states will come. So Gujarat Gas got Punjab, Haryana, and one other state in terms of the fresh licensing. So that looks very, very good. And specialty chemicals. You do use this opportunity right now to add Aarti. Looks good for a long-term play. 88% is still contributed by specialty chemicals to EBITDA. Pharma makes up for about 14-15%. And there is two multi-year contracts which are about to commence in a year from now, which will give a good fillip to the stock.
Okay, Gurmeet, we'll add that. Thanks so much for taking the time out and being with us. So less than 4 minutes left for the markets to shut shop. Just want to mark Persistent Systems. After a while, we're seeing such a move on the stock, 7% higher at 667. There is strength in Dr. Lal Path Labs. There is strength in Quest Corp, and Edelweiss is up 5% at 128. It's been on an upper circuit for the last maybe 7 or 8 sessions. Some big moves there into these names. Okay, we have very little time. I'll try and ask the long format question that I want to do in a bit, but very quickly, Aditya, can somebody initiate a long on Axis Bank?
I would wait for some time, probably not at current levels, on decline to levels of 680 to about 675. Those will be good levels to initiate long some consolidation, and then probably an up move will get triggered.
Okay, Jaman, stay on. We want to talk a little bit more on some of these mid-cap names, but you know, this is very, I was not here on Monday, but it seems very similar to what happened on Monday, when the Bank Nifty rose in the last 1.5 hours and ended at almost the day's highs. It's pretty good, really, the kind of move that we've seen in the banking names, led by ICICI, by the way, but some of the others are participating as well. HDFC Bank is up about 1% or 2%. And then the mid-cap and the small-cap indices should come up on your screen. They have been flattish, the mid-cap index about 34%. Wouldn't call this a bad day. This actually turned out to be a really good day out of the kind of cuts that we had in trade yesterday. Okay, what's moving and what's not? ICICI Bank, 2.5%, big move, strong show. Let's wait and watch if this lasts. Infosys, 2%, Bajaj Finance, 1.5%. The big boy HDFC Bank, 1.5%. What a solid move put up by HDFC Bank to help propel the Bank Nifty higher. Finserv about 1% higher, iShare about 1% higher, Cipla is about 1% higher, Bajaj Auto 2. What's not done well? Bharti Infra, I must say, it was down 8% at a point of time, just about 3.5%. Vedanta Post numbers down another 3%. IndusInd Bank stays low. Z continues to grind lower. A lot of long positions built in thinking the deal was coming. Sadly, it hasn't come thus far. Ultratech, Tata Motors, ONGC are some of the others, and Bharti Airtel too corrects a little bit in trade. But Navneet, splendid show put up by some of the mid caps. I mean, double-digit gains are now the norm and not really an exception.
That's right, Neeraj, and majority of them have been moving higher on back of earnings. And also talking about the broader markets, your breadth definitely improved towards the end. So let me begin with Muthoot Finance, which snapped the 7-day fall, reacted positively to the numbers. Their gold AUM grew by about 9%, and the management said the overall AUM growth in the second half, or rather for the entire year, will be about 15%. Suven Life Sciences came out with the numbers. The stock touched 52-week high post that, and gains of about 8 to 8.5%. Cadila Healthcare from the Pharma pack was the other one which outperformed today, outperformed its pack at least, its peers, 4% higher for this stock. DLF, the stock's gained about 40% in the last 1 month, so some stellar moves seen for this one. Continues to see long positions, 3 to 3.5% gains coming by. Apollo Hospitals came out with its earnings a while back, and the top line growth was slightly above than what the street was expecting, and you did see a positive reaction on back of that. On the losing side, of course, we've been discussing Aurobindo Pharma receiving 14 observations for its Hyderabad unit, because of which the stock fell nearly 8 to 9%. Remember, these are the levels. It's actually trading at 5-year low now, and the stock has been an underperformer so far. Indiabulls Housing, high beta stock, continues to correct today as well. It was down about nearly 3 to 4%, closing at day's low. Something like Orissa Mine, this was seeing some bit of buying in the last few days, so I think some profit booking came by today, so this one closed with cuts of 9%. And something like RBL Bank, that also fell by about 3 to 3.5%. Nalco came out with its earnings yesterday. The stock was down owing to the loss that they posted in the September quarter of about 28 crore rupees.
Well, but on the whole, I'm not a bull or a bear, but I'm just feeling happy that the markets haven't had a terrible day the way they had yesterday.
Closing in the green,
They're closing
at least,
in the green.
yeah.
Somehow, maybe all of us like the color green, and maybe that's helping. But 222 points up for the Nifty Bank. Really, the principal reason why the markets have done what they've done. Get the volumes up. They should be high. It's the options expiry, so the F&O volumes will be high.
These are really high volumes.
Wow. On the F&O side, for sure.
Yes, I think this could be record high or very close to record high levels, 31.5 lakh crore. Usually we see levels of about 28 to 29,000.
I don't remember a number above 30, to be honest.
Neither do I. That's what I'm saying. It could be, or it could be closer to that. It's definitely on the higher side. Cash has, I guess, fallen compared to yesterday's 36,800 crores.
This is massive participation. Yeah. We don't always know if it's good or bad.
And this is weekly expiry, not even monthly.
Not even a monthly expiry. But hey, who's to argue? Good going from the F&O side, at least in terms of the volumes. The contributors and ICICI Bank and HDFC Bank should be right up there. Yeah, the top two names, and no surprises there. Both of them doing exceptionally well. And you have HDFC too. I mean, when these guys perform, it's very difficult, even if Reliance performs adversely, for the markets to correct too much, just because the HDFC twins and ICICI Bank and some of the others are now kind of taken center stage in moving the index compared to Reliance Industries, which used to be the the focal point of an index momentum.
In fact, I think ICICI Bank has been an outperformer in the last 1 month. It's the top performing stock in Nifty and even in Bank Nifty. So a good going from this one. But let's just quickly pull up the market breadth as well. Of course, it's been in favor of the declines, but we did see some bit of improvement, I think, coming by. No, actually, it's a little bit, not too much. So still about 1:2 in favor of the declines for the entire listed universe.
Yeah, final thoughts from our experts. And Rahul, I want to take the first question to you. We always talk about buying some stocks as portfolio stocks. I wonder if you would be comfortable opening a slightly longer term long position into an HDFC Bank or a Bajaj Finance or a Kotak Bank based on the basis of charts. Would you do that?
Neeraj, it's a good question because, a lot of people who feel left out, those who didn't participate in an HDFC Bank and, they've seen it year after year after year, it's grown. And for that matter, even a Bajaj Finance, very strong weekly charts. So, at this point, technically, these stocks have not corrected. These stocks are not at a support. They are more closer to resistance. And more from a money management perspective, this is not a point I would, advocate a clear buy on these stocks, particularly for someone trying to get a percentile return. I mean, if you're really looking at price action on these, yes, it's positive. Yes, it's positive on the short term, more to say. For that matter, if I could add, if you look at the Bank Nifty, 31,500 looks fairly on the cards if you look at that index. Now, on the whole, at this point, no, I'm not a buyer into these stocks. I would probably look a little lower down, maybe into an SBI, maybe even look at an Axis Bank on a smaller correction. So I'd be more tempted into those stocks than to come in and buy an HDFC Bank at this point.
Okay. Aditya, the next set of stocks out there, and we spoke about Axis from a trading perspective, but would you open a slightly medium-term long position on, say, an Axis or an ICICI Bank? I would let's not include IndusInd Bank right now. These two are the more favored ones. Would you open a slightly long-dated long position?
Probably not an ICICI Bank, but Axis, yes, on minor correction, about 3 to 4% correction from current levels. I would not mind opening a medium to even longer term trade or an investment into an Axis Bank, because if I take a look at the monthly or the quarterly charts of Axis Bank, definitely looks very attractive to me. And I just may include a small bank, talk of a Bandhan Bank or a AU Bank. It's been a stellar performance for the AU Bank from 660 odd levels to about 840. I would not recommend getting into at the moment. Probably a correction to levels of 750, 780. Those will be good levels to get into an AU Bank. You should definitely see higher levels of about 1,000 in AU Bank if you stay invested from a medium to longer term perspective. Same on lines of Bandhan Bank. Probably a decent correction has already taken place from 650 odd levels to 550, 560. One can start nibbling into Bandhan Bank from current levels to about 520 on the downside. Upside can be 660 to about 700. I won't rule out even 700 if somebody stays invested for about 6 months.
Okay. On that note, Aditya, Rahul, take a moment to thank both of you for joining in today. Appreciate your time, gentlemen. And on that note, it's a wrap on this edition of Countdown from Navneet and me and the team that put this show together. Thanks so much for watching. The market wrap comes up next. Stay tuned to BQ Live.